Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Friday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So yesterday, during the CPI, we saw a crazy down move on the chart of gold and a crazy up move on the chart of DXY. But we saw strong price rejection, huge price rejection just after a couple of minutes. This is a chart of DXY in front of us. And this was the candle formed by market during CPI. And you can see after making a high of 113.89, market came down. Right now, DXY is standing at 112.30, the support level we have been talking for the last couple of days in our Euro USD and GBP USD video. So this is a support, temporary support for DXY right now, 112.30. So during the European session or US session, if we see red candle here, then obviously there will be further correction on the chart of DXY and we will see further recovery on the chart of gold. The next support on the chart of DXY will be around 110. Okay, the 200 moving average, the red line here. And if we look at the chart of US government bonds, then you can see that there was a kind of a breakout scenario on the chart of bonds. Okay. It made a high of 4.08, but it came down and right now trading again below 4%. Okay, so overall the chart of bond and DXY is still bullish, but yes, for some time we may see some correction and some recovery on the chart of gold. Now let's have a look at the chart of gold. So here is our setup for the day. Okay, to understand the setup better, I need to take you to the 1 hour time frame. So here is the setup for the day. Right now gold is standing at 1669. This is the current market price here. So if we take a buy position here, then your stop loss will be here below this level. So your stop loss will be around 90 to 100 pips. So is this a good trade? Obviously no. 90 pips stop loss, 100 pips stop loss is not a matter of joke. So see, the theory is simple. Okay, if you think that any stop loss is huge, okay, the stop loss is very big, so in that case just keep in mind that stop loss is not okay. Stop loss is there to protect you. Stop losses are not bad, your positions are bad. Okay, so in this case 90 to 100 pips stop loss is not at all a good trade. So obviously taking a buy position right now when market is standing at 1669 is not a very good thing. Okay, and if you want to take a sell position also, then obviously you can see your stop loss will be here. So the stop loss will be around 200 pips. So obviously taking a sell position in this market condition is also not a very good thing. Stop loss is a zone in the market. You can never compromise with the stop loss. If someone is thinking that you can put your stop loss here, yes, definitely you can put your stop loss here. But will your stop loss be safe? No, your stop loss will not be safe. Okay, that's a different chapter. Okay, that's a different chapter. Okay, so in this market condition, what you should be doing? First of all, if market goes up from here, then the resistance level of 1680 to 81. Yesterday it was 80 to 81. Today I'm just extending it to 82. So 1680 to 82 is still a valid resistance for the market. Those who have watched my previous yesterday's video, hopefully you made good profit. Okay, so the resistance zone of 1680 to 82 is still a valid level, and definitely we can expect the market to reverse from here. So during the day, observe the market first. If market goes up from here, observe the market, how does it react around 1680, 81, 82 level. If you see that just like our previous experience, market struggles near this level, if you see price is being rejected from above, you will get the confirmation that the sellers are still present around the resistance zone and you can take a sell position. If not a very big sell, at least you can expect a profit of 50 pips, 60 pips. Okay, so 1680 to 82, 1680 to 82 is a resistance zone for the market, good resistance zone for the market for the day. At the bottom, okay, we have 1661 to 1659. This is also a support zone for the market. Keep in mind, do not forget, this support zone is not very strong. Okay, this is not a very strong support zone. If the volatility of the market remains like this, okay, if the volatility of the market remains like this, then we can expect the market to bounce from here. Okay, listen to me carefully. If the volatility remains like this, it means if there is not much volatility in the market, if you see market forming small candles, in that case you can expect the market to reverse from 1661, 1659, 1660 level. If market bounces, go for a buy position, look for a hammer pattern or anything like that. Okay, so this is the scenario of the market right now. In case during the US session, if we see heavy volatility in the market, if you see market breaking this level with a big red candle, then obviously taking a buy position is out of the question. Okay, because after all, no level is permanent in the market, and the main difference between a gambler and a trader is that a trader only trades when the opportunity is right. So if you see that market is forming big red candle at the support, then obviously you should avoid taking any buy position, and if the selling pressure continues, you can take a sell position below 1658. Okay, same strategy we followed yesterday. I clearly told yesterday all of you that if market breaks 1659 level, you can go for a sell and you can expect at least 70 to 80 tips, and we got our profit as well. So today also, if market breaks 1658 okay level, if you see that the size of the candle is good enough, you get the confirmation that okay, sellers are back to the game again. In that case, you can take a sell position. Your target will be 1650. Yes, today the target is less because we we have got nothing. Okay, so if the selling pressure continues below 1650, okay, sorry, 1659, you can take a sell. Your target will be around 1650 easily. Okay, so your observation will be very important in this level. The support will be not the support, actually the level of 1659, 1660 will be very important for the day. If the volatility remains low, you can expect the market to bounce. If it breaks it, go for a sell. Observe the market first. Okay, and ultimately, in case of a heavy selling pressure in the market, we can expect the market to reverse from 1644 to 40 level. This is a support for the market. This is a simple setup right now for Friday. Okay, keep in mind, no trader is 100% accurate in the market. Even I can be wrong, my analysis can be wrong as well. So please follow proper risk management. Do not gamble with your hard-earned money. Capital protection should be your first priority. Bye bye, take care, see ya.